How are Apple and Tesla doing in this crazy kangaroo market? What stocks am I nibbling on? What's likely to happen next with this stock market? Hang on.
This is not financial nor professional advice. This video is for entertainment only.
Hey everyone. The market is trying to rally again, and Tesla and Apple are trying to lead the way. Tesla has an earnings growth rate of 49%, which of course is excellent, but it has that high price to earnings of 65%. It's a little bit the opposite with Apple, which is a much more established company. They're getting close to, they're encroaching on 3 trillion or trying to get there. Apple's earnings are about 18%, but their price to earnings is a much more reasonable 25. Apple's kind of the more tried and true thing, while Tesla is the more exciting thing. Tesla has all kinds of gigafactories coming out with increased production, and they will continue adding gigafactories, and that's why their growth is going to be something out of this world, probably for the foreseeable future. Apple came out with a new iPhone, and it has some great features. It has 48 megapixels on the camera, and that's always why I never bought a phone, because I always want the increased megapixels, which they didn't used to have. The Apple iPhone 14 Pro has up to 1 terabyte of storage. Wow. You also can connect to a satellite from this new iPhone if you're somewhere where there is no service. Quite amazing features. They also came out with a watch that costs about $799, and it's kind of amazing in its own way. It will tell a woman about her ovulation cycle, tell her when she's ovulating, and will monitor her fertility cycle, which is sort of amazing. So these are two leaders, and the market tends to follow them. Apple is creeping back up towards 160. It's around 157 now. Tesla, they split 3-for-1 recently, and they went down, but now they're recovering back towards 300, and that's where the struggle is at 300. And I think if they go above 300, Tesla is famous for these growth spurts. Once it crosses a major level, then it goes up even more for a while, and that's very likely to happen with Tesla. It is notable that Goldman Sachs recently said that Tesla is a big buy, so I'm going to buy it big. I own Tesla, which has, it's had a good rally in the last few days. As we look at this 3-month chart, you can see that Apple has struggled somewhat, and it's just beginning to start to really rally. And so I'm waiting for it to decide if it's going to continue to rally. I also have an overall market strategy, I will call it, as to what I think is going to happen. The CPI, the Consumer Price Index, is going to be announced on September 13th, which is a Tuesday. And I think what's going to happen is that the number will be somewhat better. And so what they call the headline number will be better. It will be down from the previous month. And the stock market will celebrate, and the market will probably go up on that day. But I think in the days that follow, it'll actually go down because the headline number is going down, but core inflation is going up, especially because rent is very sticky and has been going up almost everywhere. And that tends to be very sticky and to last. And so the core inflation will go up, which after the stock market has its first reaction, they'll realize in the days that follow. And then the market should go down. But of course, there's more than just inflation affecting the stock market. One surprise is that Ukraine seems to be doing very well in the war, and they could possibly even win this war, which would just be amazing. And that factor, if that comes to fruition, we don't expect it to come that soon. This is going to be some months long process, but it's been going faster and they've been having more success than anyone expected.
Ukrainian forces have liberated from the Russians people in more than 30 settlements in the northeast region of Kharkiv. That's according to President Volodymyr Zelensky. The gains, part of a swift Ukrainian counterattack that appears to have taken Putin's forces by surprise. This Ukraine soldier you see here, standing on the roof of a building, is announcing the liberation of a city there. That's according to the Ukrainian armed forces. Notice what he's standing on. That's a Russian flag, and the blue and yellow of Ukraine hoisted behind him. The Ukraine military also releasing this drone video. They say it shows their artillery destroying a Russian missile system in a forested area in the Kharkiv region. And here's adding insult to injury for Vladimir Putin. Even Russian state media reported on the Ukrainian breakthrough. They almost never say anything that suggests Russia isn't winning that special military operation.
So my overall philosophy right now is to nibble on some stocks that I think have potential, and that's even if they should go down. I don't think the market's going to go down that badly. We may have another 10 to 20% to go here, but things are looking up, and I'm nibbling on some stocks, and I have bought some stocks that I'm going to share with you today. And if the market goes down, I'm going to see that as a buying opportunity, just because I think it's going to go down because he's going to raise it probably 3/4 of an interest point on September 21st, and that will be a major blow to the market. But in some sense, it almost might be seen as positive because he's really serious about inflation and he'll have credibility in doing that. So we shall see what happens. But I expect it to go down after the 21st, and he may raise it further on November 2nd, but I think it'll be a less of a raise. And even if he lessens the raise to like 0.5, the stock market, as weird as it is, might see that as positive. You know, I think he's likely to go 0.5 November 2nd, or maybe even less if the inflation numbers support it. We shall have to see. But I think on November 2nd, he'll take it somewhat easier because of the midterms coming up. I think the Federal Reserve is affected by politics to an extent, not solely, but to an extent. The stock that I'm most high on is Pilbara Mining, and its symbol is PILBF, and it mines mainly lithium. It's based in Sydney, Australia. Lithium is very important, of course, for electric vehicles. It's so important that Elon Musk is considering building a lithium refining facility in Texas. Looking at the chart on Pilbara Minerals Limited, symbol PILBF, you can see that it's a $9.5 billion company. Don't let that price to earnings scare you. That's the trailing price to earnings, which is 159. But they are making so much money that its forward price to earnings is about 11. Okay, And how much money are they making? Well, let's put it this way: their earnings growth rate is 52%. Okay, is slightly better than Tesla. Okay, they say there's all kinds of money to be had in lithium mining, and I think this is a good bet to bet on that. I'm showing you this chart so you can more clearly see how it's almost doubled in the last month. It was a little less than $1.75 at the beginning of the month, and now it's a little over $3. Wow. So it's a cheap stock, and it has that forward price to earnings of 11 and that earnings growth rate of 52%. Yeah, this is a buy in my book. Another stock that's almost as outrageously good is Constellation Energy. Symbol is CEG, and it's a clean energy utility. They generate, supply, and market renewable energy and renewable energy products. So this is an area that I very much support. Let's take a look at the chart. And looking at the chart, you can see that it had a nice pop in the last week. And when you see that price to earnings, that is a trailing price to earnings of 43. And they are making so much money that their forward price to earnings is almost half of that. It's 23. And how much money are they making? Well, their earnings growth rate is 47%. Yes, people, clean energy is profitable, and I think this stock will lead to some profits. I invested in clean energy, mainly solar, in the 1980s, but it simply was too early. But I think now the time has arrived with the problems in the world and the oil shortages and the general energy shortages that solar and clean energy has arrived and is very investable. So far, we can't get all our energy from renewables, and we need oil and gas to get us through. But there is an alternative that is cleaner and can help bridge the gap until we get to more renewable energy. There'll always probably be a place for oil and natural gas, but we need to increase the amount of renewables so that we can breathe the air. And I think part of the solution to get us to the point where we have breathable air, or at least don't deteriorate the planet any more than we are, is to use nuclear power. And they've been deactivating nuclear plants or had plans to deactivate these gargantuan nuclear plants. But a lot of that has been put on hold. Germany was going to deactivate 2 of their large nuclear plants, but that was put on hold with Russia's invasion of Ukraine because Russia stopped selling natural gas to Germany, which is a major consumer of their product. The problem is these gargantuan nuclear plants are dangerous, and what they've gone to is small modular reactors, SMRs, small modular reactors. And they're 1/10 the size of the large nuclear plants, and they don't require water pumps to keep them cooled. So, the big danger with these large nuclear plants is, oh my God, if the electricity goes off and the water pumps aren't working, you can have a nuclear meltdown. So you don't have that worry. If these small modular reactors start to malfunction, they will shut themselves down. They also have that programmed into it. So the best uranium mining company I've been able to find is Centrus Energy. Its symbol is LEU, LEU, and it has a trailing price to earnings of 4, but its forward price to earnings is 13. But it has a very good earnings growth rate of 24%. So this is something that will make money. It's small, so it has a lot of growth, and you can see that it had an excellent upswing in the last month. And I think nuclear finally has a place at the table just because we need clean energy, and it's something to bridge the gap until we can get more renewables fully in force. So my gut feeling is that the market's going to go down in October, at least somewhat, if not a lot. And I'm nibbling on stocks, and I will continue to do so as long as it doesn't take the big swoosh. I'm not doing any shorting now, and I won't do it unless it begins to do the big swoosh, and that looks certain for some reason. We have a very jumpy kangaroo market, and we got to jump with it and hope we're jumping the right way with it. But I think the trend into 23, eventually the economy is going to slow down, and it may reach the point where the Fed has to reverse course sometime in 23. They're talking tough now, and they have to talk tough now, and they have to raise rates aggressively to get people to stop buying things so that we can get rid of this inflation. So I think it's going to be a tough couple of months, maybe a month, maybe 2 or 3 months, maybe longer than that. But I think sometime, maybe towards the end of 2023, we start to see light and we start to see it going down. And this might be a time to nibble on stocks, not to go all in, but to buy enough that you feel good about having bought it a year from now when the market starts to trend up aggressively. And it could start to do that sooner than that if we get a white swan event where good news hits the market, like Ukraine has won, or somehow, some way that conflict stops, because I think that is a big part of the problem, in addition to the health problems the world has had. And I hope that situation continues to improve. Thank you for listening and watching. Be sure to like and subscribe and hit the notification bell, and I will see you in the next one. Bye-bye.